Hey guys, I've been getting a lot of questions on how do I tie my estimate into my job costs? How do I actually go about doing that? So I thought I'd give you a quick tutorial on how I did it for this client. This is a civil contractor, so they use Excel. There's some that you can use, but it doesn't really matter. All that really matters is that it ends up in Excel because you're going to have a list of all the materials and align every material and every hour and every single thing that you estimate into a budgeted line item. So I'm going to walk you through just our typical bid sheet and how we do it and what it should look like by the end of it. So this is the estimate totals tab. We're going to come back to this, but I always start at least to say, hey, here's our burden rate. Here's our tax rate. This is interchangeable. Every other one in here, every other scope of work is based on these rates. So if I want to change it, I don't do it per line item. It can mess up your template. I put it in here, change it to 50. Maybe it's a Davis Bacon wage. I can change it to 97.20 is my average burden rate. So we move into erosion control. This is the first thing that they did. We aligned this new spreadsheet. They used to use 10 different ones. We combined them all into one, and we put them in order of how the projects get built. Erosion control being silt fence, SWIP, things like that. We can put in how many feet. We have 1,000 feet, for example. Oh, I should put 1,000. I do not know silt fence per linear foot off the top of my head, so I will put in $2. So the way that all calculates, it adds a tax. Now, if we are doing something that has markup or it's waste, we know that 10% of it gets wasted every time we do it. We can add in that 10%. It adds money in there for that, or we can leave it zero. You can also, this is all for material only. The labor section is down here because every material has to have labor associated with it to get installed. You can mark up the material. Maybe you know that this project's going to happen over a year and a half, and on average, inflation goes up 3 to 7%. You can throw that in here to protect yourself. But just know that that's something you need to do. We'll go ahead and we'll just add 10 bags, $50 a piece, just to show you how it works. So at the end of the bottom here, you see we have some cost codes that have different dollars amounts. I'll show you how that all works later, but basically it all sums from here. I'm just going to put this in here for 15% just to show how it works. This is the rates. We went off of their experience and how efficient their crew is. We didn't use a generic template. Other trades like electrical will have NECA standards, which is the average journeyman. Obviously, you don't have that for putting in civil work, depending on the side of or where it is in the country. So we have a general amount of demolition, clearing, and grubbing. We just put in how many acres. We'll say it's 15,000 acres. We don't want any markup. Oop, 15,000 is quite a bit. So we're going to do 1,500 acres. You can tell it goes up quite a bit, depending on what we're all doing. 100 acres is more reasonable. We'll say that that's like a industrial site. The 1,500 acres is going to be more like a Google data center at 14 million, and then you're going to get into like 15,000 acres, which is like just a whole farm, a whole county. So my mistake on that. We go through, I'm not going to go through every one of those. We have excavation, storm sewer, all of these. But at the bottom, they all get broken down into different dollar amounts. We have a couple of rounding errors that I haven't addressed in this template quite yet, but we will get to it. At the end of this, though, there's three sections I want to go over that I want to make sure you guys cover and make sure you capture. We have our equipment. This is going to be crew trucks, project manager, foreman. These are the actual, like the F-150, F-250 that you guys are driving around on site. You want how many? We have 2 crew trucks. They're going to be there for 2 months each. There's no mobilization. We just have the monthly rate. We have how many gallons an hour it burns, how many gallons total over that time, the monthly cost, and that includes your fuel and everything in there. You add up all of that. It gets down here and it goes to different things. Our fuel is not coming through. So let me just adjust that. There you go. All right, we have fuel. Now let's go to subcontractors. For them, they have surveying, concrete, different people that can do different areas they don't want to do necessarily. Now, if you're a general contractor, electrical contractor, mechanical, whoever, you're going to have different subs. So this is a custom area, but you have to make sure you account for them. And then you want to put on at least a 10% markup. So that way it covers your overhead to work, to have them work for you. Now you can put your markup here. This is going to double up on it if I put 10% here and 10% back at the first page. But we'll say the way that these are all filled out is we have, it'll take the lowest of all of the bids. You put them all in here. You can just say, hey, we know which subs they are. You can put a column at the end so you know which one to pick. Surveying, 10 grand. That's going to get plugged. We have a 10% markup. This is above and beyond what we're going to have later, but I'm just showing you how it works. Now we get into direct job expenses. You have foreman, project manager, safety. All of those need to be accounted for. I don't care if you're the owner of the company. You need to say you're going to pay yourself the project manager rate, because otherwise you're not going to have any dollar amounts in here. All the other aspects we just covered were hours it takes to actually install the work. How much work goes into installing the work? There's planning, there's purchasing, there's everything else that goes out there. So 10% should be for your foreman or superintendent, whoever. Project manager is 10 plus 20% of the foreman time. And then you have safety, which is 10% of the foreman time. And that gives us 190,000. Now we can add in our phones. It depends what you guys are doing. Maybe for me, I think it's important if you have phones on there for long projects. If you have a month or two, maybe it's not a big deal, or if people are shifting back and forth. But you want to make sure you cover everything, because when you job cost, you're going to start to identify, wow, we put nothing in there. The job extended 4 months and we didn't charge for a single phone, but we had $900 out there. You know, that $900 just gets absorbed. Same with job storage. Maybe you own a Connex. Well, you have to replace that Connex someday. And that brings me back to the equipment. I forgot to mention this. You have to figure out, what does it actually cost you to own this equipment? That monthly rate for this civil contractor is for a $3,500. Now, that includes how long they're going to keep it. And I have a template for this if you guys want to check it out. But that's how long they're going to keep it, what all maintenance is going to happen over 10 years, the registration, everything that happens over that 10-year span broken up into its life capacity. It's not, hey, my lease on this is $950, so I'm going to charge $950, because you still have to pay for tires. You still have to pay for oil changes and everything else that goes into this thing. So you need to make sure that you capture all of that. Otherwise, again, you're paying for it out of your profit. So maybe what it looks like right now is you're estimating a job and you're making 30%, 40% markup. But with all these little things that you're not accounting for, whether it's your truck, your Bobcat, your fuel, your time, it all gets taken out. It just depends where it's going to hit on your accounting side. So maybe your gross profit looks like 40%, but your net looks like 2%. This is partially why. And to round this video up, what I'm going to do is go back to the beginning. We have our estimate total. So the way that this all tallies up, adds all of these together. I pulled up the wrong template, so this one's actually not even going to tally up properly. So you can tell I had some errors. We have all of these get added from before. Now these are scopes of work. So since they do civil work, a lot of it's public work, they have line items that they have for demo and clearing, for trucking and haul off, for different areas that they have to show. This is the sales price. This isn't, or this is actually like what you're estimating it's going to take. Then your sales price is at the bottom, but we want to add on small tools, things like hammers, lasers, drills, whatever. That's normally 1% of your total labor dollar amount. You have employee benefits. You have to make sure that that 2.5% can be a lot of different things. It could be the cost of a 401k. It could be vacation time. It could be just like raises over a year and a half. Your financing costs. This one's really important. We want to make sure if it's an annual rate of 10.8. We figure out the daily. We figure out how many days on average this client takes us to spend or to pay us. And that comes up with a percent that automatically gets charged on. If you didn't charge that $15,000, I know people are going to say, well, I'm not going to win jobs if I just add all these things on. But if you don't, that $15,000 comes out of your profit. So if you look at this 60,000, earlier we talked about you had your vehicles, but that was, I want to say like $20,000. You have your cost of financing, that's $15,000. You have your PM time, your foreman time, your safety time. All of those have to get done. Well, pretty soon this number is gone. So we want to account for it and then have, I don't care if this number is 2%, and that's what you go with, but I want to make sure that it's 2%, not, well, it should be 40%, but I end up with 2% at the end of it. That's not the goal. That's fine. That'll get you by for now, but that's not, banks aren't going to loan you money based on that because you don't have a clue what you're doing. And then at the bottom, we have a place for bond. So it gives you your total bid price and your bond price. Now, this is all great. This is how you kind of estimate. Everybody knows how to do that. This is the part that the magic happens. Where does all that money get distributed in your budget? How do we track against it? So you want to make sure that everything, if you have taxes on material, if you have miscellaneous material, that's going to be the silt fence that I put in there. You have surveying, you have your subcontractor. When they charge money, it's going to appear here, or we're going to forecast out. Hey, they had a change order for $2,500. We didn't put it in, so we're going to absorb it. We put $12,500 here. You can see it's going to turn red, and we're going to see as we build the project, whether it's day 1 or day 151, we know how we're trending on a project. We can see how much money we put in for trucks and how much we spent, how much for fuel, how much for equipment, trailer. If we forgot something, we forgot to quote water utilities, well, we're going to start to find out that that was part of our scope, and there's going to be a red flag. And at least we can have a conversation immediately instead of just absorbing it and the superintendent feeling this guilt of not wanting to throw people under the bus for missing a giant scope like that. We can see trends. If it's 60% done, but we've spent 40%, we know we're making money. But if it's the other way around, we've only done 40, but we've spent 60%, well, we know we have a problem. Those are the key metrics that you need to be looking at when you job cost. And it just takes the diligence to set this up and then to track it properly. QuickBooks won't do this for you. You have to have a job costing software. And again, I don't care which one you use, but you have to do something. Otherwise, you are going to go out of business and you're not going to be able to sustain. You're not going to be able to hand it down. You're going to go bankrupt and you're going to lose your house, your boat, your truck, everything that you've ever built. And instead of doing that for 10 years, 15 years, or even 5 years, you could just go work for somebody else and be guaranteed that you can just go find another job tomorrow and have no liabilities in doing all of this. So if you're going to do it right. Otherwise, don't do it at all.